Well, James, we've had big swings in the rand over the past week, as Alicia's pointed out, but it seems that we are back on that strengthening bias at the moment.
That's correct, yeah. The rand certainly started the week off really up at the 8 rand levels, and Europe being the major concern. There's also talk of Korea, and those two things obviously being resolved with China saying that they will be holding on to their European debt and reserves, so that the rand obviously benefiting from that. But the major news in the rand this week has been its strength relative to a change in the Morgan Stanley Emerging Markets Basket Index and the related exchange-traded fund buying, basically to explain that Morgan Stanley removed Israel from the emerging markets basket, putting it into the developed market criterion. As a result, the remaining constituents to that basket, including South Africa, were increased, and as a result, we've seen some pretty strong activity, some pretty strong South African buying activity on the equity on the JSE this week, particularly on Wednesday, and obviously those foreign inflows have led to a much stronger rand this week, and figures of foreign activity up at 11 billion on Wednesday on the JSE. So that's really contributed to the rand strength we've seen so far.
Well, how would that 11 billion rand relate to normal foreign inflows into the JSE on a daily basis?
Yeah, you're looking, Stephen, as an average of around 2 billion rand foreign activity on a daily basis. So 11 it's a large number.
We are seeing some risk appetite building in the markets as well at this point, but many of the problems that have been plaguing the markets haven't really gone away. So Europe's debt issues are still hanging out there, aren't they?
Yeah, they're always going to be in the background, Stephen. We've seen, it disappears and it comes back. And I think, yesterday, for instance, Spain voted in favour of their austerity measures, and it was a really split decision with one vote swinging it. And that just shows you the sort of political volatility that is in an economy or in the government of Spain, and Spain relative to Greece, which is a much larger economy. And the fact that the coalition government their ideas on the austerity measures are split shows that there are still problems to come. And I think a lot of concerns around these austerity measures across Europe hampering any opportunity for growth in those economies, and obviously the growth that is necessary to reel in those deficits being hampered by that is going to cause concerns down the road. And there's going to be talk of possible restructurings of the debt down the road as these countries prove that they're unable to create perhaps the required growth levels.
Of course, we also had that scare on Wednesday when we saw the US market go into reverse, and that was really on reports coming out that China could be selling some of its Eurozone sovereign debt. Of course, China did come out on Thursday and deny that was the case. The market seems to have taken some comfort from that.
Yes, it has for now. I mean, these are things we're constantly hearing that affect the market. And the one thing that we can take from that is that these markets are going to remain volatile indefinitely going forward. And Europe is certainly going to be a big concern. And as we've seen, the volatility in the rand moving from 8 rand at the start of the week down to 7 rand 50 in the last day or so, we're definitely advising our importers to cover at these levels. And if you have exposures, it is something you should take cognizance of the volatility and look to cover.
Just some data out on the local front. We had growth figures released on Monday for the first quarter. We had the CPI numbers out, PPI yesterday. PPI looking a little bit worse than expected, though CPI looking pretty good.
That's right. So growth on the positive, inflation coming lower on the consumer side, also a very positive number. The PPI, interestingly enough, it was the exported portion that contributed to the higher number, and that doesn't necessarily correlate back to CPI as the old basket did. So not a big concern there, and it is expected to continue on the higher commodity prices to move up on the PPI level as well as a result of base effects. But the real focus is on the consumer inflation side, and that is expected to improve over the next month or so. And then we'll see the administered Eskom price tariff increases coming through, and as expected by the Reserve Bank, the CPI number will tend to move up over the following couple of months.
Well, throughout all this, what have bond yields been doing, James?
Yeah, it's been a good week for the South African government stock. We've seen the 157 trade from around the 820% down to current lows of around 794. The market does feel a little bit long at these levels. We've seen it bounce off the 794.93 level a couple of times, and going into Monday, which is a US and a London holiday, we'll expect the market conditions to be pretty thin, and then you have the weekly government auction on Tuesday. We'd expect these bond yields to trade a little bit higher from here.
And the rand, in the meantime, what would you expect that to do, given the volatility that's going to be ongoing in the market? Do you think that we could see further volatility for the rand as well?
That's probably pretty accurate. Volatility to remain. At the moment, it feels pretty strong. There's some comfort in the rand market. There's a few contributing sort of equity positions in that market, acquisitions that have fallen through and that are supporting the rand at the moment. So I'd expect perhaps we'll see a little bit of sort of stability in the rand, but there's always the outside volatility there that could push it weaker again.